record movements in the dairy markets are looking good for U.S. dairy farmers. Get an update on the H5N1 virus in California, and it's corn silage season, so we're going to talk about how to accurately value your new crop corn silage right here today on the Uplevel Dairy Podcast. I'm your host, Peggy Coffeen, and it's my mission to bring you the conversations that will uplevel your skill set and your mindset, so you can be a top performer in the dairy farming business. And today we bring you the HighGround Dairy September Monthly Market Insights Report with Curtis Bosma from HighGround Dairy. This episode is brought to you by HighGround Dairy, which provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. Information shared in this podcast is for educational purposes and is not a solicitation to buy or sell commodities. Opinions expressed are current as of September 18th, 2024 at 10 a.m. Central Standard Time and only represent the views of the speaker and not those of HighGround Trading unless otherwise expressly noted. Now let's find out about this news from the marketplace and how it could impact your bottom line with Curtis Bosma. Curtis, give us the update.
Well, what a month it has been here over the last couple of weeks in particular, where we have some major extension higher in a lot of the key prices that we're tracking here. So if we look just kind of simply at Class 3 futures as of September 17th here, over the last month, Q4 futures for Class 3 are up nearly $2 a hundredweight, trading above the $23 level. On the Class 4 side of things for Q4 of 2024, we are up 62 cents over the last month. So that puts us right above $22.50 for a price there. We are at a premium, those front month contracts to the deferreds. We're still in that inverted market that we've been talking about. And that is something definitely indicative of buyers staying somewhat hand to mouth with their purchasing patterns, with us being at such high price levels. We are starting to see some of the futures contracts out into 2025 start to leg up a little bit. So in particular, Q1 of 2025, we're up over $1 a hundredweight over the last month for both Class 3 and Class 4. So that's starting to look like a much more attractive option for clients looking to kind of manage a margin into the new year. Another thing to kind of be monitoring here that we've been looking at quite closely is if you look at the managed money. So the CFTC, or the Commodity Futures Trading Commission, they have a report that they put out that lets for certain position holders in the marketplace kind of their net position that's out there. So the managed money is essentially some of the large speculative players in the marketplace. This is something specifically for like the grain markets and corn and soybeans that is tracked very closely, since they do represent a pretty sizable amount of open interest or positions held in the market. We also track the same thing for the dairy commodity futures markets as well. So if we're looking at where we were in the past in terms of the managed money net position in Class 3 and cheese futures and options, we reached a record short position they were short roughly about 10,000 positions in total in January of this year. So that was definitely at a time where prices were not spectacular. We were kind of dragging on some historic lows. But since then, we've actually now moved to where the last reported kind of net position here for both Class 3 and cheese futures and options is actually the longest that they've been of all time. So they've fully swung to a long position that exceeds over 6,000 contracts. That's the most long positions that we've seen held by that managed money category in all of the history of the data that we have here. So to see this market go from historic lows to historic highs and see just the sheer money flow and position flow that's been driving it, it is quite impressive to see. Another thing that we've been monitoring closely in terms of just global dairy prices is some of the prices abroad. So if we look right now specifically at the EU and we look at their butter price or butter fat prices as it relates back to the global butter prices, they've actually exceeded over $4 per pound in an equivalent like US butter price. So that is pretty significant. I know Europe's been having some production challenges as well, with the disease that's plaguing them at the moment is blue tongue, which has been impacting a lot of sheep and dairy herds in some of the key dairy production regions across Europe. So similar to the bird flu here in the US, where we have a disease that's kind of sweeping through herds and impacting production there. But what's important to note from these tighter supplies in Europe and some of these elevated price levels is I think there's a lot of anticipation that we may see a correction at some point in this cheese market, particularly if we're looking at this CME spot market. I know yesterday the big highlight was that CME spot barrel cheddar reached an all-time high price. So we're above 256 a pound. So that's an all-time high price for that specific commodity there. Expectation is that manufacturers can shift any production that they can into some of these high value commodity style products that they could sell at the cash market, that we're eventually going to see some kind of a correction. But with global prices as high as they are, that correction may not be as drastic as we've seen in other market situations that would kind of signal a large reversal.
Some really positive movements that have been going on in the market for dairy producers, as you just mentioned there, Curtis, especially in the short-term time frame here. You touched a little bit on this, but the avian influenza virus that is now present in California, where you're located, in your backyard, so to speak. And so now you're getting kind of a firsthand experience with this and with how it's affecting producers in your area, but also would like to just get a little bit of boots on the ground insight from you of what's going on in California and what you are looking at for how it could or could not impact the futures and the long-term milk production and markets coming out of the Western U.S.
It's certainly something that obviously we've been monitoring for a while. When we saw some of the first initial cases in Texas and South Dakota and other states where this has kind of gone through, I think there's still a lot of questions out there about the transmission of how it gets from herd to herd, a lot of uncertainties on how dairies can possibly prevent it. But I know right now the big concern is because it's in California, because of just the sheer density of dairy farms that are in some of these key counties. I'm located here in Tulare County, which is the highest milk production county in all of the U.S. And I think among all the neighboring counties together make up a pretty significant part of not only the California milk supply, but also the U.S. milk supply. So as this starts to kind of work its way around a little bit, if it does act as we've seen it act in other areas, it does become a concern for milk supply and ultimately a supportive factor to milk prices ongoing. What I think is interesting is now we're at, I believe we initially had 3 cases that were reported. We're up to about 9 cases, I want to say, in California currently that are reported. If that number stays somewhat manageable, like if we're at a case number where you maybe have 15 to 20 herds that are being impacted, and that's kind of a rolling thing where it's never more than a certain amount, then I don't think we're going to see quite as dramatic of a market response on something like that. But if the spread does happen very quickly to the point where 100 plus dairies have it simultaneously, then of course we're going to be having a much different conversation around the markets, milk supply, all of those things. So I think just the sheer density of dairies and size of farms that are throughout the Central Valley here in California, it's very important to kind of monitor the situation out here.
Curtis, thanks for giving us the insights of what you're seeing and hearing from the producers that are right in your own backyard there in California in regards to the H5N1 virus that is now being reported in California. And that's just one of the things that has been going on recently in that area. But let's take a little bit wider step back and look at what's going on across the country right now, because it is harvest time. Like, it is go time for harvesting corn silage. I know here in Northeast Wisconsin, just starting to see some of those silage trucks on the road. When I was back home in Southern Wisconsin a week ago here, they were already starting to get out in the fields and getting chopping. And so this time of the year, when we're looking at corn silage and getting that new crop in, is also a time that on your side of the business, on the risk management side, you're looking at some things too. So share a little bit about what's coming up on your radar, and as you talk with producers during the new harvest of corn silage, and how to really look at that crop and the valuation of it.
It's definitely an exciting time of the year. I know we're starting to see some activity out here in the Central Valley of California as well. Silage piles going up, everything It looks great. I always say the corn out here in California is always so much taller than in Wisconsin. That's how we get our happy cows here in California. But yeah, it's really important to look at the financial aspect of kind of this large event that happens every year on the dairy where you're putting up corn silage. And working with clients on this, we kind of always make sure to break down there's kind of two ways that you're getting the corn silage. You're either growing it yourself, in which case we want to make sure that all the expenses that go into the farming and harvesting and putting up the pile and covering and everything like that can all be accumulated and properly accounted for in your bookkeeping system so that we understand what the true cost of putting up that corn silage is. On the other side, for dairies that may be buying corn from a neighbor, putting that up, in a lot of cases, those are priced off of a futures market multiple. So taking the December corn futures board price and multiplying it by, I've seen various numbers that, depending on a region, can be multiplied by, but ultimately that gives both the grower and the buyer the opportunity to manage their price risk via the futures market. So we want to make sure we're having those conversations with people. We're staying proactive when we do see opportunities to manage that price risk on those things, because corn silage is one of those things that becomes, it's a massive portion of the feed cost. It's something that we definitely want to make sure that we can appropriately value. We want to make sure we're tracking some of the factors that go into that equation as well, such as shrink, because obviously the quantity of which you harvest versus the quantity at which you actually feed can be two different numbers. So we need to understand that. A lot of producers, if you are consistently entering in data to a feed management system, you should have a lot of these numbers handy. But with that, I mean, we want to make sure we're getting to that price of the as fed value of corn silage and making sure we can get that as accurate as possible. Because then when we're looking forward at the ability to manage a margin, that is a core component of the feed cost calculations, being able to understand what the value of that is.
Excellent. Well, thanks for sharing those insights, Curtis, on corn silage valuation. It's super timely considering that trucks are rolling across the country right now, getting that new crop into bunkers and packed away and ready to get in front of cows before we know it. And so, Curtis, thank you for sharing this update for the month of September here on the Uplevel Dairy Podcast. Anything else that you want to add?
Right now, I think looking overall from a margin perspective, the fourth quarter of 2024 is set up to be one of the best in terms of cash flow that we've seen for dairy farms across the U.S., really. So I think as we are going forward, I think we're encouraging people to make sure that margins are being monitored at least, but we understand what's going on. I know there's a lot of things that are supportive to the market. We're still in a bit of a rising tide here. But as we are looking ahead, there are some excellent opportunities to mitigate some risk in 2025 and really put producers in a situation to where if you can secure that profitability, do so in a way that your positions are set up flexible to take advantage of additional upward momentum in these markets. It allows you to shift focus from worrying about the finances to going back to optimizing efficiency and doing other things on the dairy that I'm sure you'd much rather be focusing on than staring at a screen and talking about markets.
Right, because that's your job and you're really good at it and you really like it. So for those out there listening that are interested in reaching out to you, Curtis, or contacting HighGround Dairy, we have all of those links, as always, in our show notes so that they can rely on you to do that side of the business so they can do their side of the business. And Curtis, thanks again for jumping on with us here on the Uplevel Dairy Podcast.
Yep, thank you, Peggy.
You just heard from Curtis Bosma with HighGround Dairy on the monthly Market Insights Report from HighGround Dairy. HighGround Dairy provides global dairy market intelligence, insurance services, futures and options brokerage, and advisory programs to a diverse range of dairy market participants throughout the supply chain. And for more information on HighGround Dairy and to get their latest updates, make sure you check our show notes for a link to all of that information. I'm Peggy Coffeen, and thank you for listening to the Uplevel Dairy Podcast.